Hello everyone. In the previous video, we walked through the Monte Carlo risk validation tool. That tool showed how a strategy or portfolio behaves under stress, different trade paths, survival pressure, scenario shocks, and allocation logic. In this second walkthrough, we move to the Strategy Intelligence Report. This tool has a different job. Monte Carlo shows how the structure reacts under pressure. The Strategy Intelligence Report reads the statement itself and builds a structural profile from the closed trades. It looks at profit, drawdown, recovery, edge quality, consistency, outlier dependency, concentration risk, capital readiness, and deployment risk. So the question is not only, did this strategy make money? The real question is, does the structure behind the profit deserve deeper trust? This is why the Strategy Intelligence Report is needed before blindly trusting a statement, an EA, a portfolio, or a backtest result. A profitable statement can still hide weak recovery, heavy drawdown pressure, unstable months, dependency on a few big winners, or a structure that is not ready for capital yet. So in this walkthrough, I will show how the report turns a normal MT4 or MT5 statement into a deeper diagnostic profile, not just numbers, but structure, warnings, strengths, weaknesses, and the next logical validation step. The beginning works the same as the Monte Carlo tool. First, I upload a detailed MT4 or MT5 statement. If multiple HTML statement files are uploaded, I can choose which source file I want to analyze. This is useful when you want to compare different accounts, different exports, or different portfolio versions. After that, I can filter the statement. I can analyze the full statement, EA-only trades, or manual-only trades, and then I can go deeper by filtering by symbol plus magic number. That means the report is not limited to the full account only. I can also isolate one specific robot, one specific symbol, or one specific magic number structure. This is important because a full statement can look good while one component inside the portfolio is weak. Or the opposite can happen. The full portfolio can look messy, but one individual EA inside it can still have a strong structure. So before reading the report, I first decide what I want to analyze. The full statement, EA only, manual only, or a specific symbol and magic number combination. Before I go deeper into the report, I want to make one thing clear, that this video is a walkthrough. It is not a full training course. I am not going to explain every formula, every scoring rule, or every calculation in extreme detail. The goal here is simply to show what the tool does, what sections it gives, and how the report reads a statement structurally. This platform was built from a trader's perspective, not as a marketing product, not as a theory-only dashboard, but as a practical workflow for reading real MT4 and MT5 trading statements more deeply. I built these tools because I needed them in my own trading process, and now I am making them available so other traders can use them too. Here, the first thing we see is the intelligence verdict. This gives a fast structural read of the selected statement or filtered trade set. At the top, we see the intelligence score, the profile label, and the number of closed trades included after filtering. In this example, the trade sample is large, but the overall profile is still weak. That is important. A lot of trades does not automatically mean the strategy is strong. The report also gives a trust verdict. Here it says structurally interesting, but not ready. That means the strategy has enough data or behavior to study, but the structure is not strong enough yet for capital trust. Below that, we get the score breakdown. This shows why the total score looks the way it does. Sample quality can be strong because there are many trades. Edge quality can still be decent. But if risk structure and recovery structure are weak, the full profile can still fail. So this section is not only about profit. It shows where the structure is strong, where it is weak, and why the final verdict is not just based on one number. Next, we get the strategy, DNA, and profile tags. These tags are basically a fast summary of the personality of the strategy. Instead of only looking at numbers, the report translates the behavior into readable labels. Here we can see things like heavy drawdown profile, slow recovery, long underwater exposure, psychology-heavy, month-dependent, smooth equity profile, deep sample profile, fragility warning, and outlier dependent. So in one view, you already get a feeling for what kind of strategy this is. It is not only profitable or unprofitable, it has a character. It has pressure points. It has behavior that can be difficult to hold in real trading. Then below that, we get the what stands out most section. This gives a very quick read of the biggest strength, the biggest weakness, and the main caution. In this example, the biggest strength is that the trade quality still shows a structural positive signal, but the biggest weakness is top winner dependency. That means a large part of the net profit disappears if the biggest winning trades are removed. And the main caution is a trust warning, because this profile may stay underwater for long periods. So this section is useful because it does not force you to read every metric immediately. It first gives you the main story, what looks good, what looks dangerous, and what needs attention before trusting the strategy deeper. And this is also something you will see throughout this whole platform. The same idea was already visible in the Monte Carlo tool. I did not just throw random metrics on the screen. The goal was to make the tool readable, not only for me, but also for the user. That is why the report uses labels, verdict cards, score blocks, color signals, tables, warnings, and short explanations. Because the point is not only to click around and look at surface-level numbers, the point is to understand what is actually happening behind the EA, behind the portfolio, and behind the statement. Where is the strength? Where is the weakness? Where is the pressure coming from? Where does the structure start to fail? That was the goal when I built these tools. By the time I finish reading a report, I want to understand my EA or portfolio better than before. And I want the user to be able to do the same. Not just see results, but actually recognize the structure behind those results. Next, we get the institutional decision layer. This is one of the most important parts of the report. Because here the tool separates profit from trust. A strategy can be profitable on the statement, but still not be ready for capital. And that is exactly what we see in this example. The capital readiness says, profit validated, but capital not ready. That means the strategy does show a real profitable edge on the par statement. But the risk, drawdown, or recovery structure is not strong enough yet for confident capital trust. The deployment risk is labeled critical, so the tool is not saying this strategy made no money. It is saying, yes, there is profit, but the structure behind that profit is not clean enough yet. The next best action is also shown immediately. In this case, run Monte Carlo survival mode before trusting this profile. And that is why these tools are connected. The Strategy Intelligence Report reads the structure. Monte Carlo then stress tests that structure under pressure. Below that, we get the final institutional read. This gives the same conclusion in a more complete sentence. Profit validated, but capital not ready. The report explains that the strategy is profitable and the edge profile is usable. But drawdown pressure is structurally high. The strategy may also be psychologically difficult to hold because underwater time is elevated. Then we get 3 practical blocks: readiness blockers, risk drivers, and the action queue. The blockers show what prevents stronger capital trust. The risk drivers explain why the deployment risk is labeled this way, and the action queue tells you what to do next. So again, the tool is not only showing numbers, it is guiding the workflow. It shows what is strong, what is weak, why the warning exists, and what the next validation step should be. After that, we get the strategy trust matrix. This matrix separates different trust categories. Edge quality can be strong, while risk control can still be weak. Recovery can be weak. Consistency can be medium. Concentration can be high risk. And deployment can still be not ready. This is very important, because many traders make the mistake of looking at only one good metric. For example, profit factor looks good, net profit is positive, or the equity curve looks acceptable. But that does not automatically mean the strategy is ready. The trust matrix forces the report to split the profile into different lenses: edge, risk, recovery, consistency, concentration, and deployment. So instead of getting one simple opinion, you can see exactly where the profile has strength and exactly where it still breaks down. That is the purpose of this layer, not to make the strategy look good, but to show how much trust it actually deserves. Next, we get the deployment checklist. This is basically a gate system. Green means acceptable, yellow means caution, red means blocker. So instead of only giving one final verdict, the report shows which parts pass, which parts need attention, and which parts block stronger capital trust. In this example, net profit is positive. Profit factor is acceptable but still not elite. SQN is acceptable, so the strategy is not useless. There is real trade quality in the statement. But then we also see the blockers. Drawdown pressure is too high. Recovery quality is weak. Time underwater is too high. Top winner dependency is high. And Monte Carlo validation is required before trusting deployment. This is exactly why I built this section. Because a trader should not only know that a system made money, he should know what still blocks trust. Then below that, we get the parsed statement overview. This is the clean metric overview from the uploaded MT4 or MT5 statement. Here we see the main numbers: net profit, gross loss, profit factor, expected payoff, win rate, SQN, profit per day, win-loss ratio, average win, average loss, return over drawdown, maximum drawdown, loss streak, win streak, recovery behavior, underwater duration, and account after transfers. This section is useful because it gives the classic performance overview, but inside the same structural report. So we still see the normal trading metrics, but they are not standing alone anymore. They are connected to the verdicts, the score breakdown, the decision layer, and the trust matrix. One important detail here: when the full statement is selected, the tool can use the official MT4 or MT5 statement drawdown when available. That means max DD, return over drawdown, and recovery factor can stay linked to the broker statement source. But deeper path-based diagnostics like time underwater or equity smoothness still come from the reconstructed closed trade path. Then we move to the deep structural snapshot. This section starts looking under the surface. Here we see top 5 win share, top 2 month share, profitable months, payoff ratio, best month, and worst month. These numbers help answer questions like, does the profit depend too much on a few winners? Does the result depend too much on only 1 or 2 strong months? Is the monthly consistency healthy? Are the winners big enough compared to the losers? And how bad was the worst period? In this example, the top 5 winner share is not extreme, but the top 2 month share is high. That means a large part of the result came from the best months. Profitable months are around 50%. So the strategy can make money, but the time distribution is not fully clean. The payoff ratio is positive, which means the average win is larger than the average loss. But the best month and worst month also show that the statement has strong month-to-month variation. So again, the goal is not just to say good or bad. The goal is to understand the shape of the result. Where did the money come from? Was it spread across time? Was it concentrated? Was the drawdown acceptable? Was recovery clean? And does this structure deserve deeper validation before trusting it with capital? Next, we get the outlier dependency test. This is one of the most important checks in the report. It asks a very simple question: what happens if the biggest winning trades are removed? Not as a prediction, not as a simulation, but as a dependency test. If a strategy loses most of its profit after removing only a few winners, then the result may depend too much on outlier trades. In this example, the original result is still profitable after removing the top 1 winner. It is also still profitable after removing the top 3 winners. But after removing the top 5 winners, only 48.10% of the profit remains. So the tool labels this as high outlier dependency. That means the strategy is not completely collapsing, but a large part of the profit is still connected to a small group of strong trades. And that is something you want to know before trusting the system deeper. Then we get the institutional metrics pack. This section gives a deeper quality and pressure snapshot. The Ulcer Index measures drawdown pain by looking at depth and duration. Equity smoothness shows how clean or volatile the equity path is. Recovery factor shows net profit relative to maximum drawdown. Time underwater shows how much time the strategy spends below its previous equity peak. Tail loss pressure shows how much of the total loss is driven by the worst trades. Concentration risk shows dependency on top winners or strong periods. And profit stability shows how consistent the monthly return structure is. In this example, equity smoothness is strong. Recovery factor is positive. But the Ulcer Index is high and time underwater is very high. So again, the story is mixed. The equity path may look smooth in some ways, but the strategy spends too much time underwater. That is exactly why this report does not rely on one single metric. It combines multiple lenses, so you can see the difference between profit, smoothness, drawdown pain, recovery, dependency, and real deployment pressure. After that, we get the structural flags. This section pulls the main warning signals out of the report and puts them in plain language. So, instead of searching through all the metrics yourself, the tool highlights the areas that deserve attention. Here we see a high flag for heavy drawdown. That means drawdown pressure is one of the main problems in this profile. Then we see medium flags for loss streak pressure, long underwater exposure, monthly concentration, and top winner dependency. These are not random warnings. They are structural signals. They tell us where the strategy may become difficult to trust, difficult to hold, or too dependent on specific moments. This is important because a statement can still show profit while the structural flags are telling a different story. So the flags are there to make the warnings impossible to miss. Next, we get the symbol plus magic snapshot. This section breaks the statement down by symbol and magic number. So instead of only seeing the full account result, we can see which parts of the portfolio are actually contributing. Here, the report shows each symbol magic combination, the number of trades, net profit, wins, losses, and win rate. This is important because a full statement can hide a lot. One robot can carry the portfolio, another robot can create drawdown. One symbol can be strong, another symbol can be weak. Manual trades can also be separated from EA trades, so this section helps you start locating where the result is coming from. It is not yet the full EA breakdown tool. That tool goes much deeper into robot-level analysis. But this snapshot already gives a clear first component view inside the Strategy Intelligence Report. After that, we get the monthly and quarterly snapshot. This shows how the statement performed across time. On the left, we see monthly returns. On the right, we see quarterly returns. This is useful because a strategy can look profitable overall, but the profits may not be evenly spread across time. Some months can be strong, some months can be weak, some quarters can carry the full result, and some periods can reveal where the structure is unstable. So again, the goal is not only to see the final profit. The goal is to understand the path behind the profit. Was the result consistent? Was it concentrated in a few periods? Did the account recover after weak months? Or did one strong quarter hide a lot of pressure? This is why time-based context matters. Then at the bottom, we get the Export Intelligence Report section. Here, the full report can be exported. You can download the branded PDF, the JSON payload, the full ZIP package, the parsed trades CSV, and extra CSV exports like the component snapshot, monthly returns, quarterly returns, structural flags, trust matrix, deployment checklist, score breakdown, and parsed overview stats. This is important because the report is not only something you look at once on the page, you can save it. You can compare it later. You can keep evidence of the analysis. You can inspect the raw tables, and you can use the exports as part of a bigger validation workflow. So this completes the Strategy Intelligence Report walkthrough. The report takes a normal MT4 or MT5 statement and turns it into a structural diagnostic profile. It shows the verdict, the score breakdown, the strategy DNA, the decision layer, the trust matrix, the checklist, the statement metrics, the dependency tests, the institutional metrics, the warning flags, the component snapshot, the monthly and quarterly behavior, and the export package. The point is simple. Do not trust a strategy only because the final profit looks good. Understand the structure behind it. Understand the pressure. Understand the weak points. Understand what still needs validation. That is what this report is built for. One important thing I want to mention before closing this walkthrough. The statement used here is from one of my own live accounts. So this is not a random example file. I know this account, the robots inside it, and the way this portfolio behaves in real trading. That is why this walkthrough is useful for me as well. The verdicts, scores, labels, warnings, and strengths shown by the report are not random. They match the actual behavior I recognize from the account. This portfolio has strong breakout-style robots inside it. That means some systems can lose during range conditions, but when the market breaks out, the stronger robots can recover pressure and carry the account forward. So, when the report shows both strength and weakness, that makes sense. The account is profitable, but it is not structurally perfect. And that is exactly the point. The goal of this report is not to defend a statement. The goal is to read it honestly. Where is the real strength? Where is the pressure? Which parts are carrying the portfolio? Which parts are creating drag? And what still needs deeper validation? That is why I built the Strategy Intelligence Report. Not to make every account look good, not to hide weak areas, but to make the structure visible. Because when the scoring, verdicts, and labels match what you already recognize from real trading behavior, the report becomes more than a dashboard. It becomes a decision support tool. What helps you understand your EA, your portfolio, and your statement faster and more clearly.